Hello, everyone. This is David Starr here with this week's edition of Simpler Trading State of the Markets. Um, and this week I am up, even though we have an election this week, which certainly creates a lot of uncertainty. Even with that uncertainty, I do think there are some things that we can plan out and look for. And then if things don't go according to plan, we can just avoid doing some trades, and I will walk you through what I am looking at. Now, those of you who have seen my State of the Market broadcasts before, or right, and worked with me on any of the things that I do at Simpler Trading, you probably know that I look at the markets from an Elliott Wave perspective. And what I focus on there is that moves in the direction of trend unfold as 5-wave moves. We'll look at some of those in a minute. But those ones against the trend unfold as 3-wave moves. As this move down into this September low from the September all-time high in the S&P 500 appears to have done. This shape looks like a classic 3-wave move. And so overall, longer term, that has me bullish, right? If a 3-wave move, this pattern that I think unfolded in here, is corrective, is counter trend, then that tells us to expect that the market is still in an uptrend. However, there are many different counter trend corrective patterns. What they all have in common is that they are often these 3-wave moves or combinations of multiple 3-wave moves. Now I'm going to show you the 5-wave moves in a minute, the trend moves, but for now, I'm going to tell you that this move up from the September low into this early October high, this does not have one of those 5-wave structures to it, right? At least not to my eyes. And what that means is that I can't come in here and say that this move up looks like we're heading in the direction of trend. So how can that be, right? I've already told you that this move down looks counter trend. That means the trend is up, right? Or it should. Well, in this case, the way we put those two ideas together is to come in and conclude that it's likely that this corrective move down from the September all-time high is likely still ongoing, and that it may have further to go until we resume that uptrend. Now, there are a few ways that it could be ongoing. I've been working the idea that it still needs to come down below this September low before turning back up. So we'll talk about that more in a little bit. My plans that I'm going to put together, even despite the election, are going to favor the idea of looking for a spot to buy. All right, just anchoring that on the fact that everything that I see suggests that this move down is counter trend and eventually will turn back up. I just need to find the right spot. So I'll talk you through in a little bit what that exact plan is and where I'm going to look for spots to buy. But since we're in a bit of a holding pattern ahead of the election, let's take a little bit of time this week and actually zoom out to a long-term view. And I'll show you some of the other reasons why I continue to be bullish here. So I'm going to come out all the way to a 1-month chart. Right? Now, one of the things that we're going to look at here is these patterns which unfold on all time frames. right? So I'm working the idea of one of these 5-wave moves up from this March 2009 low. Right now, this is going to look even better. And if we come in and switch to log scale, which for some of these moves lasting a decade or more often is more appropriate. So we'll go ahead and put that in there. And the way I've drawn this out is here as 1, 2, 3, 4, and 5. Now, I have no idea if this interpretation is the right one or not. I can tell you that it fits everything that we see here. I can all the price action on the chart. I can also tell you that this move down from the end of this third wave, the Roman numeral 3, to the what I'm calling the end of a fourth wave, looks like a specific corrective pattern called a flat. And it's in size very suitable for a fourth wave, given how much of the third wave it retraces, given that it found support, kind of above this level, but and near this level, and given the fact that we've gone ahead and made a new extreme for the move, suggesting, yeah, this was corrective, right? Because corrective means counter trend, and we ended back up to the upside. So what do I take away from this? I take away from it the likelihood that we are heading in the direction of trend, that this move up from the 2009 low is unfolding in a manner that suggests that it's a trend move. Now, I've also drawn this, right, as a fifth wave up. And look, once a 5-wave move is complete, the market can be susceptible to a pullback. Now, I don't know whether this scenario is right, but I have to at least acknowledge that we could start to see a pullback if this scenario is right after the fifth wave is done. But look, this is a monthly chart. And one thing that I can tell you is that even if this is a fifth wave up, which it certainly could be if we look at it on this chart, that even if we're close to ending on a monthly chart for a move that's taken over 10 years, the entirety of the move is not going to be done until this leg of it, the leg up from March of this year, is done. And so we can drill in and take a closer look at that. We'll come in, let's say, to a 2-day chart so that we can kind of see all of this. All right. And because, as I mentioned, these patterns unfold on all time frames. And let's go ahead and turn off that log scale now that we're on some shorter time frames. So look, the overall move shouldn't end until this leg of it is over. And this leg should not be over until it has one of those 5-wave structures. Now, I have even less confidence in the labels that I've put in the move up from the March low than I do in the ones from the March 2009 low that we looked at it on the monthly chart. But what I can tell you is there really isn't a place to kind of put 1, 2, and 3, or maybe we put it down here or whatever and try and move things around. There isn't a way which convincingly looks like this move is done. And a lot of reasons to think that it likely has further to go. And so because of that, because the move up in the direction of trend doesn't appear to yet have the requisite 5-wave structure, even if we can't know where to put the levels or the labels precisely, we can conclude that likely this move is still in progress and the overall move from the 2009 low is likely in progress. Now, if we add to that what I was showing you on the 30-minute chart when we started off, with this move down looking corrective, right? Everything still points to more upside in the market, right? And so that is what I'm looking for. I could be wrong, but that's why as we dig in further, I'm going to look for the spots where I can start to get some confirmation and manage my risk to play for that idea, right? Where do I want to look to get in this market? Now, before we go back to that those short-term charts, I want to point out these horizontal lines that you see here. And they may look a little close together when they come through on the video, depending on how big your screen is. But notice what a wide range of prices we're covering on this 2-day chart. We go all the way from down near 2100 in the S&P 500 to up close to 4,000. And we've got what? 1, 2, 3, oops, there was another one here. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 of these lines. That isn't a whole lot. They do have some distance between them, right? And all right, these are the Voodoo Lines. This is a tool that I created, and you can see, right, when we made a new all-time high here in late 2018 and reflected downwards, that was right from one of these Voodoo Line levels. This is not a level from prior support and resistance, because until this move up that reflected down, we had never been to this price in the S&P 500. When we came back down, right to a Voodoo Line. This move up to yet another all-time high, right, just shy of the Voodoo Line here in February of this year. And then when we slam down here to the March low, right to a Voodoo tree line. Tree lines are the green lines, fire lines are the red lines. White lines, like the one at our current all-time high, these are the snow lines, right? And you can see how, and again, this level has been on this chart for years. Even before we went up there in September, ran right into it, and again, slammed down, about 400 plus points, right down to another snow line when we bounce. So when we start to think about how to analyze what prices might be doing, knowing that there's some pretty reliable behavior related to these Voodoo Lines, we can factor that into our thinking as well. So we'll go ahead and do that and remind ourselves of these levels when we jump back down to the 30-minute chart. So this is where we started, right? Looking at this move down and saying this looked like a corrective move, a 3-wave move. And this looked like a corrective move also. Well, there is an Elliott Wave pattern called a flat correction, which does exactly that. And that's what I'm showing here. In a flat correction, the A wave is a 3-wave corrective move. The B wave is a 3-wave corrective move. And then you get a 1, 2, 3, 4, 5-wave trend move down before reversing the other way. Now, there are other patterns that are consistent with this, right? Corrective down, corrective up, right? Not all of them slam down to make a new low beneath here in a 5-wave move. However, this one looks the most likely to me. Some of the others, and we won't be able to go into too much detail on this today, some of the others, for example, would be a pattern which wedges into a triangle before up. And notice the common pattern here is the before up, right? If this move down is corrective, then we should eventually head back up. And my focus, as I said, is here on this flat correction scenario because of the manner in which this has come down from this early October high here. That seems much more consistent with the flat correction scenario, the one I'm showing here, than it is with the triangle or some of the others. So what I'm going to look for, if this is the pattern that's unfolding, is after a move down that's suitable for a 3rd wave move, which I think the move back down just shy of this voodoo snow line that we hit here on Friday afternoon, right? This looks like a possible end to a 3rd wave. 4th wave up, maybe done at today's high right here, maybe needing a little bit higher. If this is the pattern which is unfolding, then I'd expect to see one more leg to the downside and then turn back up. So here's what I'm going to look for later this week, right? As this week goes forward, I'm going to look for this bounce to run out of steam. Perhaps today I'm allowing for a little higher and then to come back down, right? So what I'm going to need to do is note the high of the 4th wave. That is, if we just start slamming down tomorrow without getting back above today's high, then I'm going to call this level here, right? 33.30 and 14 cents in the cash S&P. I'm going to call that my 4th wave high. If we bounce a little bit more tomorrow, right, and then start coming down, then I'm going to note the 4th wave right up here, right? And either way, so long as we come down, right, make a new low, all it has to do is get below this September low. I think it might come to this tree line down around 31.20, or at least that was some of my projections that I've been keeping up with over the past few weeks. Now that this portion of the move has actually started, perhaps we don't go that far, but I'm still kind of allowing for it, right? But what I want to see, after the end of this 4th wave move, is a move down. It has to come back below the September low, and then it has to come back up above that 4th wave high. That's going to be the sign to get in with a stop below wherever the low is. Now, look, there are some ways to try and get in earlier. But those require a more detailed talk about Elliott Wave than we can get into here in, a 30-minute Sunday afternoon or Monday afternoon or evening state of the market broadcast, right? So I'm giving you the easy version, right? Just note these levels. Again, just like all trades, no guarantees that it works, but this is the setup that I am waiting for. And that's how I'm going to keep myself, right, from getting to warped about worrying about, does the election do this? Does the election do that? Something else could always happen. But by coming in here and identifying a scenario that looks most likely, and then saying what subsequent action remains consistent with that, and not doing anything unless I see that action, and being able to look at ahead of time and say, where do I manage risk against? In other words, where do I stop myself out if it doesn't go? Right? What are my objectives, which are minimally to back above the September high? Right? And then I can come in and take a look at, does that trade make sense, and plan it ahead of time. And if it doesn't come together like this, hey, I am fine not trading. Right? So let's say something wildly different happens. And it's hard to give a specific example of one wildly different thing, right? This is a very specific example that I've laid out, right? There's kind of one or two ways that the market could unfold consistent with this, and millions of ways that it could unfold differently. Well, if it unfolds differently in whatever way, let's say it starts coming down and breaks this voodoo tree line near 3120 and just keeps going. Well, I can just sit here and wait until a scenario presents itself. That's step number one. Then look and say what action would be consistent with that, and where do I put my trade? So I do have a reason to like certain scenarios here, but I'm only going to act if I see really the action that remains consistent with this. So there's a reason I pointed these voodoo lines out to you earlier. If we get above this level here, right, call it 3410 cash S&P, round numbers, right? If we get above 3410, that's too big for me to call this a fourth wave bounce. So even if we get up here and then it comes back down again, I'm just waiting, right? So if you see action like that, just cancel all the setups that we talked about. Look, maybe I will figure out another setup, and for those of you who are with me in some of the simpler trading venues where I trade, we'll talk about that, right? But for now, that's too far, right? Meanwhile, while I might allow this to go a little bit below 3120, again, a voodoo tree line, if it just spikes below and comes back up, maybe this setup still works. But if it comes below and finds resistance and then turns back down, well, then again, I'm just going to cancel these ideas, and we wait to look for something else. All right. So I know you've got a bunch of questions, and I do want to hit them. New Sense, Voodoo Lines on Trading View. Talk to the office and let them know you're interested, and they will put you on the list, and they're the ones figuring out whether we're going to release it there. So Nick is asking me, what would make me think that the wave 5 up is exhausted and ready to turn on the monthly? So really simple, right? It's coming back to this daily or 2-day chart. And, if we can get a pullback suitable for a fourth wave, fifth wave up, and break below that fourth wave, that would be an indication. We need to correlate that with some other information for sure. And there might be ways that we can kind of pick it earlier, but the monthly is not going to be done unless or until the daily's done. So that's the quick version of it. And we can, we can go from there and just keep up with this, right? Again, either in any of the simpler trading spots, or I'm back here every month or so keeping up with what I am seeing in the market. John Wick, do I use the Elliott Wave pattern with RAF? Absolutely. So it was actually when I initially built Ready, Aim, Fire, which, gosh, was about 10 years ago or so. It was to try and say, hey, if I see, for example, let me zoom in to show this to you. If I see, for example, something like a 1, 2, 3, 4, 5 wave move down, and this gets to your question as well, Nick. How do we know when there might be some exhaustion, right? My question was, hey, how do I time the actual reversal, right? That is, once I see us starting to go down in this fifth wave, maybe I think, hey, this move is on borrowed time, and we might start to see a reversal. But how do I time that reversal? And Ready, Aim, Fire was built specifically to answer that question. So yes, it does work with Elliott Wave, in my opinion, fantastically. Now, Vivian's asking, how come three Elliottians have different views of market direction? That is a fantastic question, right? And I'll give you the answer, because 90% of them are asking the wrong question. 90% of them are asking that question that I said Ready, Aim, Fire does well. They're all saying, well, let me count to 5, 1, 2, 3, 4, 5, and then I'll know when the move is over, right? And you see that work once or twice, and you think, oh, we can always pinpoint each turning point. Well, if you do that, you miss so much valuable information, right? The valuable information, say in this move up, right? This unfolded as a 5-wave move. This unfolded as a 3-wave move. That said, hey, there's more to this bounce, right? And once it makes a new all-time high, we know that this move up has to be a trend move. And it's going to be over, or it's not going to be over until it has a valid 5-wave structure. Now, look, I know there's some Elliott Wave folks out there who are bearish all the time. And I'm bearish sometimes also. I love trading the downside. But, right, even if, like some of those, right, perma bears, I thought that maybe this move up was a completed 5-wave move. And again, it doesn't look like it to me. But even if I thought it looked like that, it's not turning down until the moves to the downside have that 5-wave structure, right? The 1, 2, and then 3, 4, 5. Well, this one down doesn't. And I know I haven't told you all the rules for 5s and 3s, right? So I can't, right? So we're not going to go into it in detail, but just trust me. This is not a trend move. Can someone who really wants to be bearish push it to be one? Right? Yeah, absolutely. And look, just about every technique has some subjectivity to it. But I'll tell you straight up, just like I did at the outset, do I know that my scenario is right, the one that I mapped out for you? Absolutely not. And that's the thing. I trade, right? And I'm looking for a trade, and I'm setting up a trade. And the first thing that I have to know is that using Elliott Wave or anything else, being right doesn't matter, right? What I'm doing is coming in and saying, well, this looks counter trend. Is there a pattern that fits with that? Is there a place where, if it remains consistent with that pattern, that I've got to trade with a good risk reward? And so I will be the first to tell you, I don't know what the market's going to do next. And so if you're sitting there asking me what the VIX is going to do tomorrow, which I see that question, right? Who's going to win the election? Any of those things, I don't know, and I don't care, right? Because even if I knew, I'm not sure how I'd make money with that answer. Well, if I knew what the VIX would do, I might know how to make money with it. But all I want to do is put the odds in my favor, get in sync with the direction of the trend, which, as we've spent a bunch of time discussing, appears to be up, and then say, is there a pattern and a spot that gives me a high probability place to try and join that? So look, I know, just as always, this is only a relatively cursory view of how to use Elliott Wave, but hopefully you can take away the main thing from it, what the direction likely is. If we get below this voodoo tree line and hold below and keep pushing below, then I might need to revisit the direction of the trend. But otherwise, if I were you, I would be focused on the upside. Now, just a few more words, pardon me, a few more words about these voodoo lines. They are actually based on Elliott Wave, and they take out some of that subjectivity that Vivian was asking about. That is, Vivian in her question asked, hey, how come you get 5 different Ellioticians in a room, you get 10 different opinions about what's going on? Well, they don't disagree about what's going on here on this monthly chart, right? If they look at this stuff that happened a long time ago in here, everyone agrees. And the voodoo lines is the way that I've found to take those levels, right, from years and decades ago, and find projections that we can use today. And just as we saw, they are pretty spooky in how well they work, even now that we've passed Halloween. So if you want to learn more about them, we are doing a webinar about the voodoo lines next week. I think you've got a link to that posted in. Mike is asking how much below that 3120 level would be too much. And what I would focus is not on an absolute amount there, but really the behavior under. So if we come under quickly, even if it's 10, 20 points, and come right back up, especially because we know we've got a big volatility event this week that can overshoot some targets, right? If it comes back down and pops right back up, that's fine. What you don't want is something that gets below, pops, and finds resistance below that level and turns back down, or worse yet, turns down and accelerates. That's the price action that you don't want to look at or don't want to see. All right. So I hope y'all found that useful. We can certainly see what this market does, and I'll be back here again, probably in another month or two. We'll get to regroup, see what the latest is on the markets from an Elliott Wave perspective, or if you want to join me in about a week, right? Middle of next week, we'll be talking more about those voodoo lines. So again, I hope you found this discussion useful, and hope to be chatting with you again very soon. Take care. And